Hi everybody, welcome back to Accounting 2210, Tax Accounting. I'm glad you're tuning in. I'm Professor Martin. Today we're going to be talking about, in our video here, filing status. And we're going to take a look at where we've been so far in the last couple of videos that we've done. We've went through tax entities. We've talked about individuals and corporations and partnerships and the forms that go along with that. And make no mistake, that was a very brief introduction to the forms. You'll be amazed as we go along how many different forms the IRS actually has. And it's practically impossible to keep track of all of them off the top of your head. But you know, that's why tax practitioners get paid the big bucks, is to keep all this stuff straight. So we'll learn more about forms as we go later on in the class. We've learned about the tax calculation. We've seen that come together in a 1040. We've also kind of broken it down and looked at it step by step, and we'll build upon that more as we go along too. But today we're all about the filing status. It's a very important thing, filing status, because it's going to dictate so many different things about that tax return. It's going to dictate maybe your standard deduction that you can take. It might dictate phase outs and different credits and deductions that you can take. And it's also going to dictate what tax bracket you fall into. So it's crucially important that you get the filing status right for the benefit of your client or yourself if you're doing your own return. Our options, as you see here at the top of the 1040 in 2019, we can file single, we can file married filing jointly, we can file married filing separately, we can file head of household, we can file qualifying widower. Now, if you're doing your return in a popular tax software like TurboTax or HR Block or whatever, it will ask you questions and try to determine your filing status that way. That doesn't excuse us from knowing the rules, because what's going to happen is if you go into tax, you're going to have clients saying, how should I file? And you're going to have to get the details and kind of give them advice on how they should file. You're not going to be able to run to a computer and put all the stuff in and say, oh, well, the computer says, that's not going to make you look good. So it's an important topic, and we're going to give a little introduction here on filing statuses. We'll start off right at the top there, single filer. If you were unmarried or legally separated at the tax year end, which for most people is 12/31, you are a single filer. And that date there is important. If you're single on the last day of the year, then you're a single filer. State law generally determines whether you're single, married, divorced, whatever the case might be. The IRS in 2013 actually passed kind of a blanket statement that's dealt with same-sex couples, because what was happening was we had states that would allow same-sex marriages and some that were not allowing and recognizing those unions in state law. And so that kind of created a sticky tax situation. And how do you handle that from a federal standpoint at the tax level when you have some states that are recognizing and some states that aren't? So the IRS just released a blanket statement and said, if you're married and you're a same-sex couple, we're going to treat you just like any other couple. And you're going to be able to file married filing jointly. And that was a big victory for same-sex couples and a big step for them to be equal in the eyes of the tax law. Another note, if a taxpayer's spouse dies during the year, their status is still married for that year. So if a taxpayer's significant other, the spouse, dies on January 2nd, they're married for that entire year in the eyes of the tax law. Married filing jointly, you're considered married filing joint if you're married at the end of the calendar year. So you could get married literally on New Year's Eve and claim married filing jointly for the entire year. So maybe there's some tax planning considerations there. Maybe if later on you have a client and you're thinking, yeah, we're going to have a New Year's Day wedding, or we're going to get married on January 1, first day of the new year. You might want to say, well, maybe from a tax standpoint, it'd be better for you to get married on December 31. Maybe save you some tax money there for married filing jointly for that entire year. You don't have to live together the whole year to be married. So, if you got married in July but didn't live together from January to June, that's fine. Again, it's going by the end of the tax year what your status was. And just to reiterate, if your spouse dies during the year, you're still considered married for that particular year and married filing jointly. And as we saw in our last video lecture, that standard deduction kind of doubles between single and married filing jointly. Married filing separately, Normally, this is a pretty rare filing status that you might claim. It's usually only done if it reduces the total tax burden for the couple. And that's pretty rare these days, especially the way that standard deductions have been bumped up. In the old days, before the big standard deduction, it might be one spouse or one member of a marriage has a whole lot of itemized deductions, maybe a whole lot of medical expenses, and it would make it to where married filing separately was more beneficial. It's pretty rare. And now usually your tax software will kind of compute it both ways and say, yeah, you want to do one or you want to do the other. But for the most part, not a lot of people get a benefit out of married filing separately. I had a client this past filing season, a new client who brought me her return, and she was married filing separately because she said her student loan payments were done in a way that if she did married filing separately, it made her student loan payments a lot lower. So it kind of hurt her on the tax standpoint, but it helped on the student loans. So like I said, it's kind of rare you see married filing separately. We'll talk about some abandoned spouse provisions that lead to doing married filing separately. Abandoned spouse, basically one party or the other just up and leaves. There's no divorce decree in place. Spouse just kind of leaves and disappears. So that kind of leads to married filing separately too sometimes. Head of household is a very beneficial filing status that you want to look at, especially if you have a client who's a single parent and maybe they have kids at home, divorced single parent raising a kid. The reason for that is that it's a lower tax rate than single or married filing separate, and it's also a higher standard deduction. To be a head of household filing status, you have to be unmarried at the end of the year or abandoned. The abandoned spouse provisions that we'll look at in class apply here as well. You also have to have paid more than half of the cost of keeping the home for a dependent child or qualifying dependent relative. A qualifying dependent relative might be like an elderly parent or maybe a stepchild of some kind. If it's an elderly parent, they don't have to physically live with you to qualify, as long as you're providing for the cost of their living and their upkeep and all of that stuff. So that's head of household, and very beneficial because it provides you with a higher standard deduction than single and also a lower tax rate. Qualifying widower. If your spouse passes away, you get to file married filing jointly in the year they pass away. The IRS, in a way to provide relief to surviving spouses that have a dependent that they're caring for, has a qualifying widower status. You get to use a lower joint return rate for 2 years following the death of your spouse, as long as you're paying over half the cost of maintaining a household where a dependent child, stepchild, adopted child lives. So this was kind of the IRS's way of trying to help people that are in that unfortunate position where they've lost a spouse, yet they're still maintaining a household for a dependent child. And they get to do that for 2 years after the death of the spouse. Year 3, they would probably file head of household. So finally, just a couple of examples here real quick. And I'll let you read through. For every one of the examples at the bottom, you're going to indicate whether the taxpayer should file single, married filing joint, or married filing separate, head of household, or qualifying widower. So pause the video, take a second, read through those and see what you come up with, and then we'll talk about the solutions. Alrighty, hopefully you had a moment to read through the 6 cases here. We'll run through them real quick and talk about what these individuals or couples should file. Number 1, taxpayers are married on December 31 of the tax year. If they're married as of the end of the tax year, they're allowed to do married filing joint or married filing separate. Again, most of the time we would do a married filing joint return. One thing I didn't mention when we were talking about married filing separate, there are credits and deductions that you are not allowed to take if you do married filing separate. So another thing to consider there. When we talk about credits and more about deductions, we'll sort that out. But there are some things you can't do if you do married filing separate. Taxpayer is single with a dependent child living in her home. We would want to do head of household right there. We would do D. Number 3, the taxpayer is unmarried and living with his girlfriend. Single. It doesn't matter if they're living with the girlfriend or not. If they're not married according to state law, then they are single. Number 4, the taxpayer is married and his spouse left mid-year and has disappeared. Taxpayer has no dependents. So we'd have the option of filing head of household there if this is an abandoned spouse situation, if they had dependents. In this case, they don't have dependents, so all we can really do there is married filing separate. If they're an abandoned spouse with no dependents, that's kind of what we'd default to, is married filing separately. So 4 would be C. Number 5, the unmarried taxpayer supports her dependent mother who lives in her own home. Even though dependent mother, elderly mother, lives in her own home, we can file head of household if we're providing more than half the support. So 5 would be D, head of household. Then finally, number 6, taxpayer's wife died last year. 15-year-old dependent son lives with him. So in that case, we would do qualifying widower. And we do it for the year that after the spouse had died in the following year. So 2 years, and then after that we would go to head of household if we still had the dependent. So hopefully you're able to get all those. Next time, in our next video, we'll start talking about this whole idea of what a dependent is and how do we determine who is a dependent and who is not a dependent. So again, as always, if you have questions, feel free to send them my way, and we'll try to tackle those as they come. We'll see you next time.